Okay, so this week, the market gave us some serious whiplash. I mean, we saw these really sharp sell-offs, and then they were followed by these incredibly powerful rallies. It's sending some very mixed signals, so we're going to take a deeper look at the forces that are causing all this volatility. So what's really behind this push and pull? To actually understand what's happening, we need to look at the market through three different lenses. First, the charts, then global money flows, and finally, the headlines.
All right, first up, let's see what the technicals are telling us. And honestly, right off the bat, the charts themselves are showing a major conflict.
On one hand, you have some analysts pointing to some really bullish signs, like the market holding strong at key support levels. But on the other hand, you've got some bearish patterns that suggest this downward pressure isn't over yet. We're talking about things like lower high patterns, a breakdown from bullish channels, and even sell signals on key momentum indicators like the MACD. That's the moving average convergence divergence.
So analysts are laser-focused on these specific price levels for the S&P 500. Just think of support as a floor the market is trying to stay above, and resistance as a ceiling it needs to break through. Staying above that 650 support level is absolutely key for the bulls. But a break below 636, well, that could signal a much more definitive bearish trend. These are the lines in the sand where the battle is being fought right now.
Now here's the really crucial context for all this technical action. All of this is happening during a low-volume holiday week, and that means these moves might not have the conviction of the major institutional investors, the smart money. So it raises the question, is this a real shift or is it just temporary market noise?
But some analysts are arguing that the real story isn't on the S&P 500 chart at all. Nope, they say it's happening thousands of miles away, and it involves something called the yen carry trade.
For decades now, investors have been able to borrow Japanese yen for next to nothing, and then use that money to buy assets that pay much higher returns. This strategy has pumped trillions of dollars into global markets, including our own. It's acted as this massive, almost invisible source of liquidity.
So the problem really starts when Japan's interest rates begin to creep up. That makes the yen stronger, which suddenly makes those cheap loans a whole lot more expensive to pay back. So what do investors have to do? They're forced to quickly sell their other assets, like U.S. stocks, and that creates this widespread selling pressure that can seem like it's coming out of nowhere.
And this timeline from last week is a perfect real-world example of that connection. On Thursday, the yen spiked. And what happened? U.S. markets fell, and they fell hard. Then, on Friday, Japan announced a new stimulus package. The yen cooled off, and boom, our markets recovered. It's a direct, real-time look at this global dynamic in action.
Okay, let's move on to the final piece of this puzzle and see how it all builds together. The daily headlines that are directly impacting the mood on Wall Street.
So commentary from Fed officials has been a huge focus. The market is now pricing in a 71% chance of a rate cut in December. That is a massive shift from just a week ago, and this renewed hope for easier monetary policy has given a major boost to sentiment.
And it's not just the Fed. We've also had some positive geopolitical headlines, things like progress in U.S.-China relations and reports of progress in the Ukraine-Russia peace talks. All of this has contributed to the recent optimism in the market, and it's helping to counter some of those more technical fears.
So let's put it all together. What should we really be paying attention to moving forward?
Okay, looking ahead, the key is really to watch how these three big forces interact. So, on the technical side, can the S&P 500 hold those support levels on higher, more convincing volume? Globally, will the Japanese yen strengthen again and force more of that carry trade to unwind? And finally, on the news front, will the Fed and all these geopolitical developments continue to provide a tailwind for the market?
And that leaves us with this central question. Are we actually seeing the beginning of the market's next major move? Or is all this volatility just noise in a low-volume period, with the real test coming when all the big players are back at the table? Thanks for watching this deep dive video overview on 15 Minute Investor.